Hi, I'm Pattu from FreeFinCal, and this is why I think that we have a great opportunity to rebalance our portfolios and push more money into equity. Of course, when I say don't miss this opportunity in the title, it doesn't mean that there won't be another opportunity. Of course, there will be, but there's no reason for us to miss this. So, what is this opportunity? First of all, this is an opportunity only for those who understand what an asset allocation is and actually have a specific asset allocation target for their financial goals. So for this, you should have a financial goal, and for that financial goal, you should know what is the required asset allocation. That is how much you should invest in equity, how much you should invest in fixed income. That's called asset allocation. So to find out that for a specific financial goal, you can use my robo advisory template. You can download it. The link is in the description box. You can download it and use it for each of your goals. It will tell you the desired asset allocation for every year of investing for your financial goals. So you should know what your asset allocation is. Then you should take all your investments and tag them. You should say these investments are for my child's education, these investments are for my retirement, these investments are for my buying a car or starting a business or whatever it is, and you should bin the investments. Of course, the same investments can be used for different goals also. That's also fine, but you should bin them, and you should say for goal number 1, my current asset allocation is, let us say, 55% equity and 45% fixed income, and my target asset allocation for long-term goals, I usually recommend more than 10-year goals, I recommend 60% equity and 40% fixed income. So if you have been investing for a while now, if you have been investing in equity for a few years now, and if you want such an asset allocation, let's say 60% equity, then typically I would expect after this recent correction, your asset allocation would have dipped by from 60% or a little more than that. It would have dipped by 5% to 10%. So it probably could have gone below your 60% target limit. If it has gone below your 60% target limit, let's say it's now 55% equity and 45% fixed income, remove 5% fixed income and push it into equity. That's the opportunity. That's rebalancing. So you're able to push more money into equity when the market is down. So that will push up your returns. Of course, you should also do the reverse. So when the market has moved up and it has gone beyond your 60% asset allocation, you should also book the excess profit and shift it to fixed income. So that rebalancing you should do. Typically, I would recommend once a year rebalancing, but now you have the opportunity. You can do it now for 2018 and be done with it. So that's the opportunity I'm talking about. However, very few people have there are two issues. Very few people have high enough equity exposure. Many of them, even though they have been investing for equity for long, they have a very strong fixed income portfolio. If that is the case, for example, if you have 60%, 70% fixed income exposure, then this is a great opportunity for you to increase your equity exposure. Unfortunately, the problem is that many fixed income exposure is in locked assets like EPF and NPS. If it is in PPF, it's not locked. If it is more than 7-year account, you can remove the money, some money and put it into fixed equity. Don't worry about removing money from PPF. It's not a big crime. You can do it because you now have that opportunity, and as long as your goals are far away, I think it's quite fine. Take my portfolio for instance. I have about my target asset allocation is 60% equity and 40% fixed income. It was that just a few weeks ago. Now it's down to about 54% equity. So it's a 6% fall. But I can't remove the 6% from fixed income and push it because it's in NPS. Most of it is in NPS. So that's the problem. So I mean, if down the line, as you're building your portfolio, I think you should also have a liquid fixed income instrument. It can be a fixed deposit, a recurring deposit. They're all liquid enough, you can just break them. Or you can have a debt mutual fund or an arbitrage fund. That's also fine. So there you can actually push in and push out money at will And if you use a debt fund or an arbitrage fund, the tax benefits would be there instead of a FD or an RD. So compared to an NPS or an EPF, they are liquid enough and they will help you rebalance. So people talk about sitting on cash, waiting for the opportunity. There's no need to do that. You can simply invest systematically as per an asset allocation, and when the market falls like this, you have your automatic opportunity to push more money into fixed income. I don't know why people make such a big deal about it. Of course, when you are starting this investing, the departure from asset allocation will be of the order of thousands. Then it will become tens of thousands. Then it will become lakhs. So when I for people who have been investing for 10 years, 15 years, a 5% fall in equity would mean several lakhs have to be booked from fixed income and pushed into equity. But that's fine. You should be able to do that. If you do it systematically, you should be able to do that. So please look into your portfolio, have clear goals, define your asset allocation, tag your investments, and find out your current asset allocation, find out your target asset allocation. And if your current equity asset allocation is below your target asset allocation for long-term goals, greater than 10-year goals, then you can consider booking some profit from fixed income and shifting it into equity when the markets are down. So that's the opportunity I'm talking about, and I think there's no reason for us to miss it. So catch you again later. Bye-bye.